I would expect that the kind of disruption that came when DeepSeek showed up, I don't think that's the last time we're going to see something like that. When AI is doing everything that it's supposed to be doing, it just presents as software. It's like, oh, okay, that's automated, and it does what it's supposed to do. Do you think AI will end up being deflationary at the national economy level? Do you think it'll kind of have that effect?
Hello, fellow data nerds. My guest today is Scott Stephenson. Scott served as chairman, president, and CEO of Verisk Analytics from 2013 to 2022. Verisk trades under VRSK on NASDAQ, has a market cap of over $40 billion. Since leaving Verisk, Scott served as chairman of Avetta and most recently became chairman of One Incorporated, a digital payment solution for the insurance industry. Well, Scott, welcome to World of DaaS.
Thank you, Oren. Good to be with you again.
Yeah, good to so you are the second timer on World of DaaS. So this is a huge honor.
I guess so.
Yeah. Now we first talked when you were CEO of Verisk.
Right.
Now, how do you think Verisk has done since you've departed?
Well, I had a few hopes for the company when I was stepping out in 2022. Really, there were four things that I was hoping would happen. And, they were the things I was talking about actually around the time of my departure. Those were, number one, I was hoping that we would sell the energy business. The second one was that in light of having sort of changed the contours of the business, because there were other non-P&C businesses that had been sold even before that.
And P&C is property and casualty.
Pardon me?
P&C is property and casualty.
Property and casualty, right. So
for our listeners.
Kind of the majority of what the company was. In light of that, the second thing I was hoping for was that the costs would be refactored to reflect a more, focused kind of a business.
And cost being refactored, meaning like reduction in workforce and stuff.
Mm-hmm.
Yep.
Yeah, in line with, and mostly center costs, and mostly in line with the fact that the shape of the company was changing a little bit.
So center meaning like at the headquarters, operations, those types of things.
Yeah,
G&A.
shared technology and, things like that. The third thing I was hoping for was there was a project called the Reimagine Project that was actually initiated in 2018, 2019, but it was basically about trying to completely rethink the most legacy part of the whole company and just to come up with fundamentally different ways of serving customers and adding value. And the fourth, which is kind of a little bit more tactical, but by the time I left in 2022, the company had been out in the public markets for 10 years. And so I felt that there were some matured processes that ought to be in place, one of which was to provide guidance to the markets. We were now a well-seasoned kind of a stock.
So what do you mean by providing guidance? Like it wasn't providing general
annual guidance of,
that wasn't happening?
It didn't. Does
interesting.
Now.
Okay,
does
got
now.
It. Okay.
Yeah.
Why wasn't it happening before? I thought like most companies do that.
Well, usually when companies begin to go public, they take the opportunity, at least for a while, to talk to the street in the ways they would like to, and it frequently doesn't involve guidance, kind of right out of the box. But by the time you're in 2022, the company had been public for 10 years, and so to me it seemed like it was time to move in that direction. So those were four things I was hoping would happen, and they did happen. So they have happened. So I'm
that's great.
Happy with that.
That's amazing. How did now when you did when you have a new CEO, like how did you work with the new CEO? Like how's it work? Like, or does the new CEO because like classically the Mark Andreessen advice for when everyone gets a new CEO is throw the old CEO under the bus, right? Like that's one way of doing it, right? Another way is like, okay, we're going to be collaborative and et cetera. Like what happened in your guys'
Well, in the case of Verisk, the person who succeeded me was my CFO.
Yeah, and
so he had been with the company for several years, and so it was. And I felt really strongly a desire to see an internal successor, if at all possible. So I had been active for years, actually, in creating a couple of internal candidates, and the board chose one of them.
Okay. Cool. So the board like ran a process, and then they had maybe some internal and some external or something.
It was more focused on the internal candidates.
Okay, got it.
Yep.
And usually, like the CFO is not always the best leader of the company. Maybe in this case, because it's like more financially oriented, it could be like more like why do you think like in this case the CFO was a better pick?
I think I think there were a couple good candidates, but the board felt comfortable with him. Lee Shavel is his name, and he was well known to the board, and so I think there was just there was a comfort factor there.
Now you were there for a while. What what like when you look at it in hindsight, are there like what are things you would have done differently? How do you think about your journey there?
Well, maybe I can tell you what I consider to be a couple of the lessons that I take away from the journey, and maybe I can just take a second and create a little context around all this, because it's actually a story which played out over a long period of time. But I do think that some of the things which developed are good. I just think they're kind of good things to think about for our DAS entrepreneurs who are on our call here today. So it actually the precursor company to what became Verisk came into the world in 1971, and it was basically the P&C insurance industry deciding that these agencies that they had at the state level that were basically stood between the insurance companies and the regulators in order to facilitate data flow from the insurance companies to the regulators. But the insurance industry collectively in 1971 said these state level agencies that exist, let's pull them together into a national organization. It should be,
and it was a nonprofit.
It was a nonprofit. Right? So,
if you're enjoying this podcast, please sign up for our newsletter. Go to worldofdas.com. The link is in the description below. Now back to the video.
1971, all that stuff gets pulled together, nonprofit, and basically remained in that same condition for 25 years.
Yeah.
Until 1996 when it was reorganized. But
and you were, at the time, you were like a partner at BCG, and they were one of your clients, right?
No, they were not one of my clients, but you're right. I was at BCG at that time. And actually, I didn't know the organization at that point. But the importance of that first phase of the company, I think, was fundamentally two things. One was the solutions were being put out, the then set of solutions, much smaller than what's there today, but they were being put out they represented a good deal of value, because being not for profit, essentially the customers were getting these inputs at cost, and they were reliable products. And so customers felt comfortable increasingly standardizing their own processes around what it was that this company, which then was called ISO, was putting out. So that was one thing. And the second thing was that the company organized itself in a way that it really had a lot of interaction with the customers. Customers were involved at the governance level. There were many standing ways that customers were able to provide input into the products and solutions that the company was putting together. So it was 25 years.
How did it go from like the nonprofit to for-profit? Like, how did the equity get distributed at that point?
So this is an important part of the story. So because enough trust had built up, literally over 25 years, the industry was eventually approached by the company and said, hey, if we reorganize and become a stock-based entity, a for-profit entity, hopefully we will be able to improve the performance of the company and reinvest back in and bring you yet more solutions that would be helpful to you. And that was an argument which took a while, but the industry eventually agreed. Essentially at the 25-year point, yes, okay, we agree with that. And so as the company was getting reorganized, there were two classes of stock. there was the class of stock that was given to about 250 insurance companies who, in proportion to the amount of use they made of the solutions,
so
and therefore
basically how much revenues they were
how much exactly
right. So one
how
of them
much
was
they
a
were
million
spending.
and the other one was 500,000. The million would get twice as much stock as the 500,000.
That's right.
Okay.
Directionally, that's exactly right. And that class of stock had 90% of the economics of the business, meaning it owned 90% of whatever the value of the company was. But there was another class of stock that was put together, and that was 10% of the economics, and that was an ESOP. And the ESOP, as it turned out, had a fair amount of the sort of the voting rights at the board level, and so you have a company which becomes
So
fairly
it's
agile.
so basically employee controlled like pretty quickly, which is rare for a company of that size.
Correct, although it was much smaller back then,
Yeah.
but that's exactly right. And so that's why, I basically, that was the first 25 years. The second 25 years runs to the end of 2021, and that was when I was there for,
Yeah.
almost all of that. But you needed that foundation of depth with the customers in order to be able to make that kind of transition. And so I just really call that out, because I used to frequently say that I felt like I was standing on the shoulders of giants, because they had spent all this time sort of creating this depth of relationship with the customers, and a degree of connection and trust, which enabled it to be reorganized in the way that we just said. So basically, you have a new company in 1997. It doesn't make any money. It doesn't grow very fast. Doesn't do business overseas. Didn't write a line of customer-facing code. It had to change. And analysis, in many ways, was basically actuarial science. There might have been 5 people around the company that used generalized linear models to, kind of model something. But
so Verisk is growing a lot. Like if you just look at this, as we're recording this now, the share price is roughly like $275 a share. It's 40 billion market cap company, which is like amazing. But like, is there something you think you could have done where it could be like $1,000 a share right now? Like, is there some ways to like really was there a 10x thing that like you're like, oh, I wish I could have done this or something? Or
yeah, well, we went through some evolutions where in 2009 we went public. 2013 we became a component of the S&P 500. And like at the beginning of the journey for me, if you had told me that we were going to be an S&P 500 company, I would have just thought you were crazy. Like how in the world could that happen? But what I would say about the journey is we had a playbook that fundamentally sort of featured five steps in it. The first one was to try to get as much proprietary data as we could. The second was to turn the data, whether proprietary or public or mixing them all together, into what I call analytic objects that became kind of industry standard, scalar value kinds of things that customers would use, pull into their decisioning. The third was to have enough service and support, but not too much, enough so that we could help customers get value out of their use of an industry standard solution that their competitors were also using, and to be close enough to see how they were using it so that we could make it better. The fourth was to wrap all that with software, whether it was analytic software or more kind of workflow software to get our signals into the customer's systems. And then the fifth was to expand the solution sets. Because once you've sort of created that software link with the customer, it's like you put a tool belt around their waist, and now it's easier to put new products, to hang new products on that. And so those are the 5 steps. And I'd like to think that we did a good job at each of those 5 points. But I really think what got us as far as we got, so it became a $35 billion total enterprise value company by the end of 2021, by the end of the second 25 years.
Yeah.
I think what was really the most important thing was the rate at which we were running around that circle. I think we were running good plays at each point around that circle.
Yeah.
But I think it was actually the rate at which we were running around the circle that was kind of different. So could we have run faster, and would would that have created, a $70
Or is
billion
there a different circle or something?
yeah, maybe a different circle.
Yeah.
I don't know, but
No, Verisk is one of the it's one of the most successful data companies, but really almost no one has heard of it. Like of all the S&P 500 companies, it's one of the least well-known company of the investor class, right?
right.
Now, being relatively unknown, is that a feature or is that a bug? Like what how do you think about that? Because you could think of it both ways, right?
Yeah, I think that for the public markets, I think that the investors who ought to be interested in a story like Verisk's and Verisk find each other. I don't think there's any real gap there. And then otherwise, the profile that you get from being public. I mean, a
I mean,
lot of it
maybe
is,
you can like recruit better people. Maybe it's I don't know. Like I'm just kind of like obviously you can make a lot of cases that it should be better known. Maybe the stock market, maybe the stock price jumps a bit. You have more retail people in it, et cetera. Of course, not being well known also gives you all these advantages too. Like I don't know which way it nets out.
yeah, one of the things that comes to mind as you ask that question is, not infrequently when I would go and visit the CEOs of our customers, in a nice way, they would sort of tease me about our performance. Kind of they can see that we were doing well, and
All right, and they're like,
high
"Hey,
margins, and
you're taking more. You're raising prices too fast, or
yeah, like,
something."
why are
Yeah.
you raising? Right,
Yeah.
exactly. Like, I'm over here trying to make my company go. So I guess I always thought of the profile in the public markets as being kind of a mixed thing, and the messages we wanted to get through to customers in order to, help them to see the value of what we were offering, and hopefully to encourage them to adopt. I felt like that was in our hands, whether we were public or private. So I don't know. I didn't worry that much about
Yeah,
our
I mean, I know
being a
like
household name.
CEOs go through this as well. So I know many CEOs I know they're like, okay, should I'm not on social media, or I am on social, like, and there's
Mm,
pluses and minuses of like being well known both as a company and being well known as CEO. Obviously, you want to be well known to your customers and your
yeah,
market.
exactly.
Um, and then, but like, so, it's like, I don't know, Flexport. Like, I'm not a customer of Flexport, but I know so much about them because like they're out there, the company's out
Uh-huh.
there. Ryan Peterson, the CEO, is out there a lot. Like, I read them all. So it's like I kind of know a lot about the company, even though like I'm not a customer. Like
Yeah,
there's no reason for them to market to me. Maybe when they eventually go public, like maybe I'll be more likely to buy their stock or something. I'm not sure.
yeah. No, I hear you. There's another dimension of kind of being known and what you're known for. And this also, I think, is an interesting point for, folks that run companies that share some of, what goes on at Verisk or at your companies, and et cetera. And that is, in your desire to do as much as you can, to add as much value as you can, how far do you or do you not get away from, what might be considered sort of the center of what you're doing? So it's been the case from the beginning that the by far the largest revenue stream, and the greatest part of what Verisk has been serving the property and casualty insurance industry. But there were moments along the journey where we chose to try to move into other vertical
Sure, you
data
guys bought
analytics.
Argus, you bought some of these other
Right.
things, right?
Right. And one part of the story, by the way, which I think naturally sort of gets lost as you move forward in time, is the company went public in 2009 based on 2008 financials. And in 2008, revenue grew about $95 million. And the reason why that's interesting to me is about half of that growth was in the mortgage analytics business,
Very interesting.
not the core property and casualty set of
Yeah,
solutions,
yeah.
about half of it. So it really is the case that when the company went public in 2009, it was based on performance, which was the growth part of which, at least, was pretty substantially mortgage analytics. And then in the time period from about 2010 to 2012 or 13, so shortly after we went public, the greatest excitement on the street where the company was concerned was the healthcare analytics business because
Yep.
it was growing much faster than the PNC, business. And so it's just an interesting thing about you try as many things as you can to try to grow your business. But as I said before, by the time we got to the end of 2021, what I felt I was seeing, at least, the perception of the company out in the marketplace was your property and casualty business is so pretty and so optimized.
Yep.
Anything else you've got inside the company is just going to look like the redheaded stepchild. And
And by the way, it depends like where you are too. Like it's like in property and casualty, like versus like the clear number one. Like it's not even a close number two in what you in what it does. But there are other businesses where like you don't want to get into like being like the number four player or something, right? So it also depends on like, yeah, it'd be great to have like six businesses where you're all number one in too, right? Like that would be amazing, but it's just hard to do that, right? Like
Yeah, and I think that in that second 25-year phase, we tried many,
yeah,
and I think what we proved was that it was hard to gain as much advantage, that 5-point wheel. It was
yeah.
just a little harder to make that work in these other domains, maybe because of their structure, but also just the compare and contrast. Your point about are you known and what are you known for? I mean, when you've got something that is so strong and then you've got something which is not as strong, it just naturally draws attention to the thing which isn't as strong. And I concluded by the end of 2021 that, as kind of around the time of my departure, that the optimized business was a focused business. So, the entrepreneurs that are listening to us today, you should think about, can you change the surface area of your company? But be aware of the fact that in the end, what will get rendered is the strength of the thing that is maybe your core, and then the strength of all the other stuff. And like there just can naturally be a reckoning. I don't
Yeah, and but
regret.
also if like you focus on like there's might be ways to focus more on the core and make that business way
Exactly.
better. Maybe there's way to expand it. Maybe there's like way to grow it. And so the as people like if they try to diversify, then they're going to lose focus. It's like if you're an oil company and then you like Getty Oil back in like the 70s bought all these financial services companies and stuff like that. They even owned like ESPN at one point, right? And it's like, yeah, it was like maybe that was smart in some ways, but like they were oil people, like that's what they knew. And then they actually their oil business started to decline because they were starting to focus on all this other stuff that was out there.
Yeah, exactly. And so it's kind of the both and quality of it in that, I mean, if we in 2009 when we went public, if we did not have the growth associated with the mortgage analytics vertical, would we have gotten out, or would we have gotten out at this,
Yeah.
in equally good condition? And we enjoyed at least 3 years of real favor in the market because of the healthcare analytics business, not the PNC business, or at least not so much. And so it's on the one hand. But then on the other hand, by the end of all things, you sort of have to look at the relative performance of everything, and that's how everybody else is going to look at you too. So it's a both and.
Now, Verisk and Visa, they both start as nonprofit industry consortiums. What are some other examples of companies that like made that transition from nonprofit to for profit? Like, what can we learn from those?
Well, I don't know that there have been a great
Yeah, I
number
mean,
of them,
obviously, there's
but
like OpenAI right now, which has just done that or is in the process of doing that, and they're probably like the most famous one at the moment, which is making that transition.
yeah. So I always thought that a reasonably good analog were Visa and MasterCard. And ultimately you're going to get judged on, are you actually creating value for customers such that they
Yep.
want to buy your solutions? And then if they do, then you're going to get rewarded for that, and then the performance that the market likes will follow. So I think that but what I would stress is, if you started out in that not-for-profit mode, were you creating value for your constituents then?
Yeah.
with really good solutions that are being very, very competitively priced because you're not even trying to make money, so you're selling
Yep.
them essentially at cost. And are you really, really engaging with the industries you're serving in a way that there's trust and relationship building up? There was 25 years of that before I even showed up,
Yeah.
and
Yeah. That makes a
that's
lot of
really
big
valuable.
difference.
So I really encourage our entrepreneurs, whether they're starting not for profit or they're starting for profit, just to lay that foundation. It's going to serve you well.
Now, when you think of companies like Visa or MasterCard, like they're sitting on this just like treasure trove of data. Um, how would you advise companies like that to monetize it or think about monetization, that type of data?
Well, they think about it,
Yeah,
first of
of
all.
course.
They
Yeah.
definitely, want to do it, but they are appropriately very sensitive to how their customers feel about them reusing the data, repurposing the data. And I would imagine in both cases that they have gone about as far as they can because they know that it's a good idea if they can. But
Yep.
basically, the pathway to monetization is going to be to anonymize the data,
Yep.
tokenize
Coerce
the
or
data so that it's
understand.
highly
Yes. Yep.
secure,
Yep.
and so that there's just no shadow across the idea of doing it. And then you probably need to think hard also about what's their incentive for you to monetize the data that they've given you access to. Do you need to
Yep.
provide them some incentive so that they'll lean into you doing it?
Which could be like giving them access to the insights or giving them price breaks or something like
Or
that.
both,
Yeah.
right?
Yeah.
In the case of Verisk, the same contract in which a customer agreed to buy our solutions, they also gave us access. They gave us rights in the data
Yeah.
in
It's
order to be
classic
able to create
co-op.
the
Yeah.
solutions.
Yeah.
And then when you're negotiating the contract, we were very open to discounting the contract, at least to a degree, in order to have or even expand data rights.
Okay. Interesting. Now, like so many companies struggle with like monetizing their data effectively. Like, do you have a framework for like determining when data has some sort of genuine commercial value versus just when it's just like quote unquote interesting?
Uh, I would sort of walk to the other end of the question that you're asking, Oren, and kind of put it this way. If you and I, well, when I when I began my career, which was quite a while ago, if I had wanted to get a petabyte of storage capacity, probably would have cost like $8 million. I mean, the kind of thing that would rise to the level of
Yeah.
the board of directors deciding to approve it. Now, today, if you and I wanted to get a petabyte of storage capacity, we could rent it in the cloud for what, $10,000? I mean, wherever it's
I
going at.
actually don't know the cost, but it's very low.
It's
Yes.
very right,
Yeah.
exactly. And so my starting point is in this world that we're in, where it doesn't cost very much to first order capture the data. Well, then grab the data. If you're in front of it, like grab the data.
Yeah.
And so always be
And most
asking.
most people are already doing it. They're already like getting the data. They're already like, maybe not in a smart way or something like that, but they are like capturing it. Like most
So
people are not
then
like deleting
the
it
next
today.
thing
Yeah.
where I would go to next actually is be capable of using it in a very high velocity, low cost sort of a way, and be capable also of bringing in the next data sets and putting them up alongside the ones you've already got.
And
And
that I would say that's where most people fail down. Is like joining the data sets
exactly
is non-trivial.
right.
And there's some entity resolution. Also, it means like you have to understand like not all your data is good, some of your data is bad. So then you have to be like fixing the data.
Precisely.
All data munging and et cetera.
Yeah. So, basically create your data as flat and denormalized as you can, and then build really good data fabric in which you can actually sort of reach in, pull it up, and begin to make use of it. And so if you're not spending very much in order to grab the data, and you're not having to spend a lot in order to be able to access the data, then to me, the premium goes to be in close touch with your customers, show them something that is novel that you just came up with, see if it's starting to resonate with them.
Yeah.
And then, pay a lot of attention to, don't just back your truck up to their loading dock and give them this new synthesized set of signals, but understand what they do when they pull it off the loading dock into their own environment. And now maybe you're really getting some insight in terms of what do they need.
What are your thoughts on this? Like, all these companies now have like chief data officers. Like, what's your thoughts on that?
I think that a chief data officer can be very difference making um, at particular moments in the journey for a company. I would say, especially if a company has not really given a lot of attention to monetizing data or is not yet really well organized to make use of it once it has it, then your chief data officer can be your point person.
I don't even know. Like, I'm in the data world my entire life. I have no idea what a chief data officer is, what it does. Is it just like a glorified salesperson? Is it a glorified BD? Sometimes they have this huge org under them. Sometimes they have like one person under them. Like sometimes it's just like some random, like it's like 3 consultants in a company, or like it's
Right.
like I know what like the head of engineering does, like the
Mhm.
person who like, or all the engineers, the chief product officer does. But what is it? What do they do? Like, and why is it even valuable?
Well, let's start with that. What's the purpose of the role? To me,
Like, to me, the purpose is
fundamentally,
just like, oh, give someone like who's smart a title. We got to give them like a cool title with a C in it. But they don't really. It's like they're kind of a glorified like spokesperson or something, and they sit on some panels and stuff.
well, hopefully not that, but I
Okay.
understand. I understand why you say that. I think of a chief data. Well, your data should be thought of as an asset.
Yes.
And there are a lot of people that are advocating for different things you're trying to get done inside your company. There are people that are advocating for the customers. There are people that are the engineering crew is advocating for changing the processes or rewriting the software to accomplish a certain set of things. So you've got people that are advocating for different things. The chief data officer should advocate for the maximum value of your data asset.
Yeah.
Should
Okay. Got
maximize
it.
the value of your data asset.
Okay. So in some ways, they're like the capital allocator for your data. Their goal is to
Well, they should
understand
also,
that. Yeah.
one of the things that you get data, many companies get data in a lot of different ways, which can be a little bit haphazard. In other words, some of it comes from you run your processes. Some of it could be that, you buy it. But is there kind of a comprehensive view of, look, this is what we've got, and this is what it's worth today. If we added to it, if we did something different with it, here's how and why the value of it might go up. Somebody should be thinking about that.
Yeah.
To me, that's fundamentally what the CDO ought to be doing.
Now, you left Verisk, I think, literally like 3 or 4 months before ChatGPT came out.
Right.
So like the entire world in some ways has changed
Right.
in the last 2.5 years.
Right.
Like, how should companies be thinking about like the world of AI now?
Yeah. So I don't think there are too many companies out there that would see themselves as being direct competitors of an OpenAI or of an Anthropic or any of the people that are kind of at the level
Yeah.
of the
There's
large
probably
language.
10 or something. Yeah.
Yeah, right,
Yeah.
exactly. And I'll just side comment, by the way. I mean, those foundational pieces are extraordinarily valuable. I do think it'll be interesting to see how much of the profit, the surplus that gets generated by AI methods, flows to the providers of those foundational layers versus those who sit on top of them and essentially try to make use of them almost as tools as they try to
And
sort
how
of
do you think there's like right now there's roughly, let's say, 10 of these companies that are out there spending gazillion dollars each on building these models. Now, in some cases, like one is the clear leader. Anthropic right now, at least, is the clear leader for code. So if you want
right,
to write code, pretty much
exactly.
everybody like builds stuff on top of Anthropic. The clear, obviously, like leader for the like consumer sentiment and using the consumers open AI, or maybe Grok's starting to come in and stuff like that.
Right.
But as they if they're like roughly the same, then I assume then they're just going to keep lowering their price, right? If they're roughly the same, and then
Well,
it gets out of the way.
and the end around of somebody like DeepSeek.
Yeah, exactly. Well,
who
and it's
basically
easier
went
to just yeah, exactly. Just
open
to
source, and then we work hard to tune it up.
yep.
I personally think, now I'm biased because my work has been in vertical spaces, trying to be intimate with the data and trying to be intimate with the customers. But I really do think that a lot of the value here is going to be experienced by those who can kind of use those things almost as tools, as inputs, and then find a way to generate insight that's really valuable, and not easy to get to. So it's kind of like small AI rather than big AI. But and that's a lot of what I'm involved with today. The companies I invest in, et cetera. That's where they sit. So I would expect that the kind of disruption that came when DeepSeek showed up, I don't think that's the last time we're going to see something like that.
Well, I assume like in the data world, like you have any resolution, like that's something where AI can play huge. You have risk modeling where AI can play. You have any type of models that people built before, where you built these very, very, very specific type of models. I assume that AI could probably make much better, allow you to do quicker. So if someone's spent like 5 years building this very, very, very proprietary model, like they're going to have some competitor come at them in a way, right?
Yeah, no, I agree. And I mean, I think that my own thesis would be that if you are a company that is already a leader in its space and there's kind of a content richness to what you do, you ought to be able to amplify your advantages by making in this AI
Yeah,
moment, in this AI motion, you ought to be able to. I'm not sure every company is. In fact, I think that many of the incumbents are kind of sort of trying to. I mean, they know they need to be doing something. Like you'd have to be brain dead if you're not doing something on AI. But I think a lot of them are still.
just like chief
It's
data officers, they all have chief AI officers too now.
yeah, right,
I'm not sure what
exactly.
those people do, but yeah.
Yeah. Well, I'm not sure what those people do either. Right. But uh, so I think that let me put it to you this way. When AI is doing everything that it's supposed to be doing, it just presents as software. It's like,
Yeah.
oh, okay, that's automated and it does what it's supposed to do. And, when you think of it that way and you think about software, chunking along, even if it's highly automated, we always worry about, is the human in the loop and in what way? So there has to be adaptation here where let the AI take the first draft and the second draft, and a human is in the loop somewhere. But take the efficiency of it for sure. And you mentioned code writing before. That's one of the strongest motions right now is
Yeah,
code
for
writing.
sure. Yeah. I assume any type of writing, any type of I mean in some ways like AI itself is just by default deflationary. And so you should see it lowering costs in your own organization, but because of that, your competitors are also doing that. So that means you're going to probably have to pass some of those savings on to your customers by lowering prices as well.
Do
So
you
I
think
think
do you think AI will end up being deflationary at, say, the societal the national economy level? Do you think it'll kind of have that
I
effect?
don't know if it'll be, but for companies that are in the data world where your production is data, your production is software or something, it will allow you to do a lot more with less resources, with less dollars. Even just like the average engineer today is probably at least 30 to 50% more productive than they were a few years ago. So
Right.
just by deep, like everyone is becoming more productive. So that's in itself deflationary, right? That engineer you spend a lot of money on is way better
Yeah.
than they were, and you're not really spending that much more on that engineer today than you were 2 years ago. So I think we'll see scenarios where companies are going to like they're going to become more profitable in the short term, but then at some point you got to pass those savings on to your customer.
Yeah, customers will expect that. I think you're
Yeah.
right about that. And at the intersection of, another thing that has been at work inside of our knowledge intense companies, and that is offshoring to human beings. So like what happens with that motion, and then you overlay AI on top of that. I mean, it really is
Yeah,
an
well,
interesting
I
question
think
about
I think the
talent.
first place AI attacks is everywhere you've offshored. So I would be at least short term short on India and Philippines and stuff like that, because I think those guys will get hit the fastest. Anything you're BPOing today is probably something where AI can like do a decent job.
Mm.
And where if you're paying like someone in the United States like $1 gazillion to go do something, maybe AI is just going to augment them, make them a little better. Whereas like in a place like India, it could actually replace that person.
Mm-hmm. Mm-hmm. Yeah, that's it. Yeah,
Now
remains to be seen.
okay. You spent a lot of time in the insurance industry. It's gone through like a pretty crazy past few years. I think 2024 showed like the first underwriting gain in a while. What's the overall state of the industry?
I think it's it's always innovating underneath, but if you're looking at it from the top down, I think that there is change which is occurring, but it's interesting. The insure techs, the companies that started out as they basically felt that their major innovation was the ability to differentiate risk and to attract customers, the so-called insurtechs. They haven't swallowed the industry and they've been at it for a while now. In fact, some of them kind of have plateaued a little bit. So you had those kinds of changes. There's been a lot of speculation that maybe the capital markets would just kind of step in and disintermediate, and what effect would that have on global reinsurers? And there's been some of that. There is some securitization, but there's still a role for global reinsurers. So I think that structurally it kind of looks more like it used to, and probably will continue to, than not. The profitability that you were talking about. I mean, we had this real major effect coming out of COVID, which was inflation in a lot of factor costs, and so now you're trying to
Building costs and stuff.
yeah, exactly. So now you're trying to settle a claim, and wait a minute, how much does a 2x4 cost in
Right,
Philadelphia? Wait,
totally.
what?
Right. And
You
the
know,
labor, of course,
and the
has gone
labor.
up, so much.
Yeah, so I think when you're looking at 22, 23, you had a fair amount of that, but I think the industry has sort of caught up with
The
some
industry's
of
also
that.
like they're just also just exiting markets. So in many markets, like
Yeah.
when I lived in San Francisco, I had one option. I had only one. Some of my friends, depending on where they live in California or in Florida, they have zero options. They have no
Right.
way of insuring their homes today.
Well, there are the
So
risk pools that
yeah,
the states put together, as the insurer of last resort. But it is interesting, like the Southern California fires, the terrible fires that
yeah.
happened, early. I think when the story is all told, one of the really major parts of the story will be how many people were underinsured or not insured at all.
Well, yeah, I think because I think a lot of their insurance companies have pulled out over the years. I have a friend in Healdsburg, California. They built their dream home, and then they realized right after they built it that no one would insure it.
Oh my.
So they were, close enough to a fire zone that nobody wanted to take that risk.
Mm,
And when you have certain properties of certain sizes, in terms of dollars, like the state's not going to really come in either. So they're essentially self-insuring their own property.
yeah. Yeah. So, well, I think, it probably in some of the higher risk places, I mean, people still like to run to the coasts. They like to
Right.
be on the beach and build expensive houses there. And so you're putting yourself, in harm's way. You're
Yeah, totally.
consciously putting
Yeah,
yourself
yeah.
in
You
harm's
you
way.
consciously are doing it. Yeah. It's just tough. It's really hard. Now
Yeah.
you recently became chairman of One Incorporated, which processes like almost $100 billion in annual payments across like almost a million vendors. Like, what's broken about how like insurance payment flows work today?
I just think that you, as an insurer, you naturally are giving a lot of attention to things like segmenting risk, selecting risk, pricing risk. That's the guts of what you do.
Yep.
And so you naturally need to send money out in the form of claims. You also receive money in the form of premium payments. But if most of your attention was going somewhere else, then I think it follows that maybe your methods with respect to payments in and out just haven't modernized as much as maybe some of the other things. And so
I
that
mean, there are
creates
people
then,
who there are people in the fires who there's so many people who the insurance companies could only pay them by check. And there's
well,
so many
that,
scenarios. There's all these stories about how the check got sent to the wrong address or got
right.
sent to their old address, which was literally burnt up and stuff like that. They couldn't access that check for many, many weeks. It's just crazy.
Well, that's exactly, that's sort of the legacy of where we have been and the way
Now, are
we
they
have been.
sending the checks? I thought they were sending the checks because they were just trying to keep the float for as long as possible. So they're just being jerks and sending the checks. But you're saying they're sending the checks because they just don't have another alternative
Well,
to
yeah,
send the
and
payments.
also you just want a feeling of security with your insured, just that they feel good about the form of the payment they're
Yeah,
getting,
yeah,
and
yep.
et cetera. So if you're going to get the insureds to be, I'm thinking of consumers, to be comfortable with being paid in other ways, you may have to do a little bit of work. And for all of those reasons, focus on the modern methods, work the network, make sure that the endpoints are more than happy to, in fact, desire to receive payments in these more modern ways. Like, that's a lot of work. And so it creates the opportunity for a third party to come in and focus on just this one thing and really get it right and really get it optimized. And that's why there's the One Inc, which is, growing very, very rapidly, because now it just seems to be a moment when a lot of the insurers are, willing to open up to a new and different way to manage payments.
Now you're now spending more and more of your time on boards. Like, what are your thoughts of how to be a good board member?
Well, I would start with the thought that the most important work that a board member does is not in a board meeting.
Yes.
It's between board meetings. And so,
And that is
because
what is that? Is that getting to know the company? Is that building? Is that understanding what's happening? With
I
the
think it's,
team.
I think it's doing the work to really understand what the issues are. And then it is being available in a way that makes sense to the management team to actually talk things through. A board meeting is going to be more for sort of like ratifying
Yeah.
decisions, basically. But the kind of actual deep work and thought, so we're trying to figure out how to reprice what it is that we do. Okay, sit in on the pricing meeting if the management team wants you,
Yep.
and contribute your thoughts to that. Advocate for the company out in the marketplace. If you know people that could be customers or partners, like, do the work, advocate for the company. So the most important thing is that it doesn't happen in the board meeting.
Mark Zuckerberg at Meta, he's got two kind of boards. He's got like his traditional board that we've all heard about. He also has a product board. Now, some of the board members on the traditional board are also on the
Also,
product board,
right, right.
but these are like very, very deep into product stuff, and they do like the product reviews with him. And can you imagine? And they're all outsiders who, and they spend quite a bit of time, with the product team. And in his company, like, product is the most important. You can imagine something similar. Another company who, instead of product, it's whatever is the most
Yeah,
important thing for
whatever is
that
the most
company.
important thing.
Yeah,
Right.
yeah.
Yeah, exactly. Right. And, board members, I mean, there's literal sort of governance kinds of things that board members do, but I think really helping the company to go. And so Meta, public, I would say, especially if you're in a private company framework, you're not having to worry about much of the public
Correct.
governance
Yeah.
things.
Then you might as well just
You're
dive in and help.
liberated. You're
Yeah,
liberated. Work on
yeah,
the business.
yeah.
Help it to be a better, you know, more, more rapidly growing, more profitable, better for customers. Like, work
Now,
on that.
I'm sure at Verisk you had a wide variety of board members, from insanely helpful to maybe not that helpful. Was there something about the personality of the people that were insanely helpful that you could like pattern match somehow? Like, if you're recruiting board members, if you're advising CEOs to recruit them?
Um, well, I think it's not particularly helpful in a board meeting when an individual board member will kind of make a speech or
Yeah.
kind of
Hijack
speak
it. Yeah.
cathedra and like, here's the thing that you should do. So first of all, those things I talked about before, like interacting between board meetings and the things, like really helping to get the thinking tuned up and advocating for the company, those are really, really important things. But I would also say the ability in when you're sitting with others and the ability to put out an idea, not as kind of a settled conclusion, but more, have we thought about, this or that?
Yeah.
And now the CEO, she or he can really kind of take that on and take that away. And yeah, maybe we haven't thought about that enough. Thank you.
Yeah.
So there's a
In
way
an
that you can
appropriate way.
there's a
Yeah.
way that you can push people without being pushy.
Yeah. Yep. Okay, that makes a lot of sense. Now, if you think these more PE-backed companies that are out there, I have this belief that like in the 80s, like the best run companies were the PE-backed companies, but now today, like the worst run companies are the PE-backed companies. Like they're just like super bloated and stuff like that and bureaucratic. But I don't know, you've had a lot more experience with PE than I have. Like, would you agree? Would you disagree? Like, how do you think about like PE backed companies?
Well, I think that a broad brush really kind of doesn't fit.
Yeah, of
First of
course.
all, when you
Yeah.
look at the kind of league tables for PE firms, you can see substantial differentiation in performance. So
Yep.
let's start with that, like there's not just one monolithic, way that it works. I think maybe the dividing line a little bit more is there are moments when a company could maybe really take off if there was a focused, thoughtful program of investment to try to build on or build things that aren't in place right now. And if that gets missed because the orientation is, well, let's make sure that above all else that, like EBITDA is mounting
Yep.
rapidly. And, so there's a strong orientation towards, only cost takeout. Or, another play that I think it's very reasonable to think about is price. Like, should price be raised? So those kinds of levers are naturally going to get thought of, on almost all occasions. You're just naturally going to ask those questions. And there's no reason to resist asking those questions. But what I'm trying to say is if that's the playbook, but the company actually could be something much more than it is, which probably would lead to even more value increase. Let's make sure that we don't miss those. Excuse me, we don't miss those ideas. And so, what's in the company's playbook? What's in the PE company's playbook? So and I think there's different personalities to the different firms. So
Yeah, they're all different. Yeah.
yeah.
Now, a few personal questions. You're one of the small group of executives and CEOs and who talk openly about their faith. We talked about this a little bit on the last time you're on World at S, like 3 or 4 years ago. Like, what, how has that kind of faith informed your leadership?
Well, I guess I would say a couple of things. So I'm a Jesus follower, and I have been for my entire adult life. And I would say two things about that journey. One, I have spent countless hours sitting in groups of people, and we all have the same book open in front of us, and we're all looking at the same words, and we're going over them, and what does it mean? And then we come back to them, and you come back to them again and again
Yep.
and again.
Like a Bible study or these other types of things.
Right. And
Yep.
also, maybe some creedal things that you would say in the average, worship service. But my point is, I know the effect that it's had in my life to come back to the same big ideas, the same verses, the same words
Yeah.
over and over and over again. It actually changes you. It changes how you think. And so I've always had it in mind in when I've had the opportunity to provide leadership, state the big ideas and then come back to them over and over and over again. That's why I felt so strongly about authoring something called the Verisk Way.
Yeah.
And I would open many, many meetings with people around the company by going over some part of the statements in the Verisk Way, because I know the power of it in my own life to
And
go
even then,
back.
like I imagine, like with a biblical text or verse or something like that, you have many people who might interpret it different ways. And then even yourself, you may interpret it different ways over your life.
Yeah, right. Right. So keep talking about it.
Yeah.
Exactly. And I'd say the other part of it for me is that there's a natural, I went through a major change in my life when I was 23. I did not grow up as a Jesus follower. My family didn't go to church, but that change occurred for me in a very
What
short
was
period.
the story? Like, why did that happen? Or what?
A
How did
friend
that happen?
I was about a year out of college, and everything circumstantially in my life was fantastic. I had a great job, great circle of friends, just everything was, I'd had a wonderful time in college, et cetera. And I just realized that I wasn't happy.
Okay.
And it was scary
So
to me
kind of
because
a
it's like, wait a
classic
minute, if I'm
thing.
going to get everything I want in life and I'm not going to be happy, then maybe I'm never going to be happy. So I started describing my condition to anybody who would listen to me, basically, but especially friends. And one friend said, well, if I got you a Bible, would you read it? And I said, sure, and so he did and gave it to me, and he put a bookmark in a place in the Bible, the Christian Bible, that they're the four books which summarizes Jesus when he was on the planet. The fourth of them is the book of John, or the Gospel of John. He put the bookmark in there. So I think I took it home that night and started reading it. And I thought, wow, this Jesus guy is just like the coolest ever. And that was it.
So you had never read the Bible at that point?
I had never read the Bible.
Oh my gosh. Wow. Okay. So you really had grown up quite secular to not have read. Okay. Because interesting.
Yeah.
Wow. Okay. And then after that, you just anyway, kind of hooked you in?
Yeah. But you were asking, what is it about all that informed the way I led? So one was commit to the dominant ideas and go back to them over and over again. The other is to believe in the ability of people to be transformed. And so invest in them, invest in their growth, in their development, believe in them when you give them a bigger job, stay close to them, help them. But having experienced a form of personal transformation myself, I just know that it happens. And so I lean into.
So many people also, they rise up when people believe in them.
Exactly.
So it's like almost that's the missing ingredient that they need to believe in them and stuff.
And so leadership for me was and is very personal. It's very personal.
Yeah, that's cool.
Yeah.
Okay. Speaking almost the opposite question, but a question we ask all of our guests now. What's a conspiracy theory that you believe?
A conspiracy theory that I believe. Oh, wow. A conspiracy theory I believe.
You don't seem much of a conspiracy theory guy.
I don't start out that way. I'm not sort of looking around corners in that way. A conspiracy theory that I believe. Wow. Maybe if you have another question, something will pop in my
That's good. I mean, it's interesting that you don't have one that comes. I probably have like 50 in my head.
You have 50?
Oh yeah. But I love it. I have all these crazy conspiracy theories about art and wine and lots of random things that are out there. Yeah. Private equity, venture capital. I got them all. All right, last question we ask all of our guests, which is also new since you were on, which is like, what is the conventional wisdom or advice do you think is generally bad advice?
Yeah, I want to say this carefully. But I think that there's a lot of advice which is given, especially to younger people, which is follow your passion. And like, if you're not passionate about it, don't give it any thought. And I understand where that comes from. And if your giftedness naturally leads you in the direction of, fill in the blank, whatever it might be, that's probably a pretty good indicator that you might want to be interested in that. I've long thought that the three things that correlate with somebody being really happy in their work is they're good at it, they find it interesting, and they can attach some higher level of importance to it. Like it serves the world. I feel good about the fact that what I do, shows up in the world. And so if passion means like I naturally go in this way anyway, then you're probably going to hit at least the first of those three, which is I'm good at it,
Yep.
just because but I think that the issue that I have with that is, okay, now you've taken a job with whoever, and you're in your 18th month or something, and somehow it's just kind of not feeling completely right. Of course, you should keep your eyes open. Of course, you should look around. But the problem is, I think the follow your passion thing can also make a person a little bit inert. It's like, I haven't found it yet. So, like, maybe I shouldn't do anything. Or I'm in a place that it doesn't feel like the greatest fit. Therefore, I'm going to kind of mail it in.
Yeah.
That doesn't serve you at all. No, do excellent work wherever you are.
Yeah. Though there is something about to do excellent work, it's hard to do it unless you have at least some passion for the job and the work and the company and the people around you, or at least some sort of combination of those.
Mm-hmm.
If all those things don't really line up and you're only doing it for the paycheck, it's hard to do excellent work. Or do you disagree?
No, I mean, you need to have I don't disagree in that you need to have all your energy available in order to be able to do excellent work. I just think that I'm looking for balance.
Yeah.
I'm just thinking that there needs to be, because that advice tends to, I've heard it at so many college commencements, for example.
Totally.
And I just think unqualified, it doesn't actually provide enough guidance.
Well, also, it's like, it's almost a scenario where it's like, oh, you probably have one passion and you should follow that particular passion. In some ways, like it almost should be opposite. Like, work at something, and then hopefully you'll develop a passion for that thing. You may not know. Like, most people don't know. Like, I can't imagine most people are like, I'm passionate about accounting or something when they're 18, right? But maybe later you actually do develop a passion for that, and you do develop a passion for that. Like, and then that's great. And probably within us, there's many, many, many things we could develop. There's not like just one thing that we can develop a passion for.
To me, that's yes. And I think that's the important. If you think about it, if the topic is steward your own career, then one of the things that is true is we have a terrible information problem, because of all the things that a person could probably do at any given moment, we know a small fraction of them, right? I mean, you just don't know everything that you could potentially go do. If you're trying to make a rational decision right now, you haven't seen everything. So something that it seems to me is constructive is be excellent where you are, move forward, keep your head up, keep looking around, be open to moving towards something that maybe is a better expression of what you're good at, what you find interesting, et cetera. So it's not like you have to remain rooted wherever you are. But we have a huge information problem.
Yeah.
How do you know what you could do? You don't know everything. I do think
there is something about just like, what do you do when no one's looking? Like, what do you do when you're free time or something like that? Like, when I even think of my kids, like my son, like whenever he has downtime, he's in a big book. He's just reading the book. He's not playing basketball. He's not like, so like, he's not doing his instruments, or he'll do anything possible to not like do like the practice for his instruments or whatever. He's not like, there's so many things he could be doing, but that's probably an area where he's probably more likely to be passionate. Whereas like other kids, like when they have free time, they're like shooting basketball hoops, or they're, they're doing, they've got something else, or they're building Legos, or whatever it is that they're doing. You start to see what they start to do. And then you have a sense, okay, well, like they may be more likely their passion is somewhere in that route, somewhere in that, in that world.
Yeah.
All right, this has been amazing. Thank you, Scott Stephenson, for joining us at World of DaaS. I follow you on LinkedIn. I know you're not really on X and stuff yet, but we'll get you there eventually. And I encourage our listeners to engage with you there. This has been a ton of fun. Great second time guest.
Thanks for having me.
Absolutely. Thanks for listening. If you haven't already done so, please subscribe to World of DaaS wherever you consume your podcasts, YouTube, Apple, Spotify, and more. And please help us get discovered by leaving a review. And check out worldofdaas.com. That's worldofdaas.com. And of course, connect with me on Twitter @Auren, that's AUREN. Would absolutely love to hear from you.